Yeah, I'm losing my
main
head.
segment, gold futures options trading with an options guru himself, Jermal Chandler, everybody. This is going to be a nice piece here. I haven't done something like this in a while. Broke out my old back testing skills and looked at a bunch of historical data. And I wanted to give people, a lot of people, when they go from equities and equity options, this, will be like, ooh, but what's the difference with, gold futures or gold options? It's got to be like a different world. And yes, it's a different asset class that affords you diversification. The movement is different. When stocks are up, gold could be up, down, or sideways. That's what we want in diversified action. But you'll see here that at the end of the day, it's pretty similar. Let's start out by just looking at the chart here. Small metals, the market that we're looking at, is primarily gold, also has some silver in there, making one simple precious metals product. I mean, relatively range bound here. And maybe you can speak a little bit to the price action we've seen in metals and how you regard a trade like this relative to your stock trades. I mean, it's not like it's a different, I would say, like it's a different kind of dog, like a different breed of dog, not a totally different animal though, right?
Yeah, it's a good point. It's a different kind of breed of dog. I actually talk about this a lot with different friends, and they're like, oh, I see this happening in gold. Like it's reached these levels. I think this is, the time where it's going to continue to go or continue to fade. And just talk about how it's a little bit of different animal than equities. I mean, equities have, all these different kind of things that keep them in check, if you will, at times. I mean, you got, like we hear about now with Twitter, you got a board and you got, just all these different other things versus metals are just a different type of breed of trade, which is nice. Like you said, it's not like we want everything to be the same. We want that kind of diversification. And we've shown several charts, whether it's on Splash or whether it's been on Engineering the Trade or whether it's been on Tasty Trade Live, about the correlations between this and equities. And it's usually negative, which is another interesting thing. So that's why this is important.
Yeah, exactly right. But something that's interesting is that people a lot of times will think like, oh, Twitter, though, I can understand. Twitter stock, I can understand because I understand, their product. I understand the board aspect, CEO and everything else. Metals, it's not that different, right? Like it's different in that, yeah, it's a commodity. There's no board that is kind of keeping this thing in check or anything like that. But it's supply and demand, or, if people are feeling fearful, they'll probably buy gold and silver as a store of value. So different, but similar concepts that at the end of the day, just push the price around. Now, what's particularly interesting to me is this range bound trade and how you can potentially take advantage of it. If you're used to, short strangles, iron condors, and equities, this would have been a great trade over the last couple of years here, because we have had, like your friends have called out, like, oh, a big run on gold, new highs. And they have put in those new highs and created fearful moments. But short strangles, short options in general could have been particularly profitable over the last year, right? That's when you see a range bound trade like this, it always to me is like, man, I could have been selling strangles and iron condors the whole time.
I know, right? I mean, and you can see it. You highlighted some of these levels just over the past year. There's definitely opportunities to do such things. Because of the different, like you said, it's kind of within that range bound between 80 and 70. That gives you opportunity. Like we're just talking about earlier with oil. We talk about the different ranges we've seen in there. Similar situation. That gives you the opportunity that you want, be able to get in and out.
And commodities are really ripe with that because stocks will tend to drift higher. But crude oil, gold, though they'll show extreme prices at times, they tend to show this range bound aspect. So a good note for options trading in the gold or silver or small metals market. Now, it's particularly interesting to me, and I wanted to do some number crunching because we are near the highs, is I've been thinking the last couple of months, and this is a bad thing to think or especially say explicitly, is like, man, I've sold a lot of calls in this market. And I'll be damned if they haven't been profitable every single time. Now, knock on wood, I'm going to lose the next time here. But what we've seen here and what I back tested over the last several years is looking at the 16 delta calls, selling that in a market like SPRE. Theoretically, you should be winning only 84% of the time. But you've got overstatement of about 5% actually over the last couple of years, Jermal. I saw that you were winning 89% of the time by selling those calls. A classic case of option premium overstating, why we tend to short options, not buy them. So hopefully you take some solace in that. Last thing though, and I thought this was kind of crazy, when gold and silver prices are high, and when what I deemed as high was over $75 in SPRE, which is kind of around 1900 or 2000 in gold, the actual rate of success on selling 16 delta out of the money calls in this SPRE market up to 98%. Now, again, there's risk in these markets. Of course, gold can go from 2,000 to 2,500 to 3,000, what have you. But this is great overstatement, and I think a great opportunity for people to get started trading some options in, of course, you can go to GC futures or something like that, but the SPRE has been nice. You see the overstatement in the historical numbers, and also a small way. I mean, you've probably looked at it before. I did it as recently as the last 24 hours, sell a call for $60, pull $30 out of it. And I'm risking at the end of the day, maybe $100, $200, a nice small way to take advantage of this overstatement.
Yeah, man. And like you said, I think you were about to touch on, you could probably trade GC, but I think for those who are kind of new to this, SPRE is a good way to go, especially now there's SPRE options, because it's just, the contract is smaller and it's a whole lot easier to manage, I would say, overall, for most of us who are retail traders.